In today's private market pulse snapshot, the one thing I'm focused on is the multi-trillion-dollar investment opportunity in infrastructure and the growing role of private capital in meeting this demand. For decades, infrastructure investing has been synonymous with government-funded highways, airports, and utilities, but today that is changing. Aging infrastructure, the global energy transition, and the recent growth in digital infrastructure, especially around AI and data centers, are creating a new and unique investment opportunity. The numbers, by the way, are staggering. Just to keep up with economic and population growth across the world, we will need an astounding $51 trillion in infrastructure investment through 2040, or that's about $3.2 trillion per year. So what is the exact investment opportunity for private capital investors? Well, for starters, much of the world's infrastructure is aging and is really in a desperate need of an upgrade. In the US, nearly 43% of roads and over 46,000 bridges are in poor condition. And as you can see, most US infrastructure is at or near its useful life. The average age of the US electric grid? 40 years. Water systems? 45 years, though some date back over a century. Oh, and everyone's favorite, the New York City subway, well, that's over 120 years old, and within a decade, nearly 75% of its power substations will be more than 50 years old. And it's not just the US, though. In Europe, 40% of the electric grid is over 40 years old. In Japan, more than 60% of its grid is halfway through its useful life, and much of the physical infrastructure, think roads and bridges, etc., is around 50 years old. So the need for upgrades is obvious and it is urgent. Second, there's the energy transition. The global shift towards renewables is creating, once again, a multi-trillion-dollar investment cycle. Indeed, by 2030, around $4.5 trillion will need to be invested annually in clean energy transition to meet net zero goals. That includes everything from solar and wind farms to battery storage and EV charging stations. And then there's the digital infrastructure, the backbone of today's economy. The growth in cloud computing and artificial intelligence is driving demand for data centers. By 2030, global data center power demand is expected to soar 165%, with the US driving nearly 40% of that growth. To keep up, that means the US will need to double its data center capacity by 2030, or at an equivalent of 3 New York Cities worth of power demand by 2030. But here's the challenge. Governments are facing rising budget constraints and they can't fill this gap alone. So that's where private capital is increasingly stepping in. And over the past 5 years, private infrastructure funds have raised over $625 billion, and they're sitting on $350 billion in dry powder. Now, deal activity has been strong last year, and it is not likely to slow down. The asset class is expected to grow from $1.5 trillion today in AUM to $2.3 trillion by 2029. For investors, this is a major opportunity. First of all, infrastructure continues to deliver strong inflation-protected returns. Over the past decade, for example, private infrastructure has generated an annualized return of 9.6%, far outpacing the global 60/40 portfolio's annualized return of 5.9%, and certainly outpacing the average G7 inflation of 2.5%. And second, the broadening of the asset class into digital infrastructure, for example, means greater growth potential as well. With stable cash flows and powerful secular growth drivers, this space is becoming an increasingly attractive part of private markets. Indeed, here at iCapital, we've seen this growing interest, with 35% of all real asset flows in 2024 directed towards infrastructure funds, which is up from 20% in 2023. Bottom line, the world is undergoing a once-in-a-generation infrastructure transformation, and the governments cannot meet this challenge alone. From aging infrastructure to energy transition to digital infrastructure, the opportunity set today is larger than ever, and private capital is playing a critical role. And that's your one thing in private markets this week.